Good morning, listeners, and welcome to the Trade Talk podcast. This is Shrikant Chouhan from Kotak Securities PCG Research. On Thursday, we saw one more spectacular session for Indian markets. Market opened higher, made a high of 18,880, 890. From there, all the way it closed lower, but overall market breadth was better, and number of mid-cap and small-cap companies did better than expectations. If we consider the overall pattern of last 5 days, then the markets are moving higher and making a new high. However, they are finding difficulties to sustain at higher levels. Broadly, we are seeing some profit taking in large cap companies, but sectoral rotational activity is still there. And yesterday we saw activity in almost all the cement companies. We are of the view that we should be buyer if there is any correction during the day, and around 18,750, 18,700 market is having excellent support. Between these levels we should be buyer, and we can keep stop loss at 18,600. We are not expecting market to sustain below the levels of 18,600 so easily. We are expecting market to consolidate between the range of 18,600 and 18,900 before giving any meaningful rally in the market. Above 18,900, we are expecting market to move towards the levels of 19,000, 19,050, where it has huge amount of call writing. So between those levels, we are expecting market to come under some serious profit taking, but otherwise we are of the view that we should be buyer if there is any correction during the day. However, on the dismissal of it 19,050, we are expecting market to move towards 19,300. So while looking at the overall option statistics of the entire month, 19,000 is going to act as major resistance for the market, and 18,600 should act as major support. For the Bank Nifty, 42,900, 43,000 would be support area. On the higher side, 43,500 and 44,000 levels seems achievable, as a few banks are still showing lot of bullish strength, and we are expecting those stocks to perform in the near term. However, strategy should be to buy on dips. Now if we go through with the macro factors, then there is a huge amount of change. Dollar index closed below the mark of 105, which is positive, and remember 103.5 is going to act as major trend decider level for the dollar index. In case in the future dollar index starts sustaining below 103.50, then we can expect furthermore weakness in the market. I'm going to say weakness in the dollar index, and that will help actually our currency to trend higher. Now if we go through with the 10-year bond yield, then there also we saw quick drop to the levels of 3.55, and it was mainly because of the PMI number which came below the mark of 50, which is a cause of concern for US markets, because then they are expecting that US markets are now going to face a recessionary sort of trend in the medium term. So that's the reason we saw fall in the bond yield as well as dollar index, which will help our currency and maybe Indian other currencies to perform better or to appreciate in the near term. Our currency closed at 81.25, and in case if we see furthermore weakness for dollar index, then our currency will drop to 80.50. That's the view on the basis of charts. We are going to focus again on technology companies initially, because there we are expecting furthermore activity, because fall in the dollar index is positive for the Nasdaq as well as for IT companies, and also we need to focus on those companies which are related to gold, and gold related financing companies should do well. Apart from that, cement companies should do well, because there we saw a classic reversal pattern in almost all the companies. So there we are going to focus in today's date. That's all from my side. With this I am ending today's morning podcast. Thank you very much for listening me. Have a great day and nice weekend to all of you.